All right, thanks for tuning in. This will be a SIFT webinar with myself and Kevin Lee. Today's topic is lessons in fraud from the front line, fighting back with machine learning. Excellent, thanks, Kevin. So my name is Nishal Patel. I'm an account executive here at SIFT. I primarily focus on helping our customers in the EMEA segment build digital trust and safety with SIFT machine learning. And I'll let Kevin Lee introduce himself.
Hey there, everybody. My name is Kevin. I lead the Trust and Safety Architect team here at SIFT. Basically, what that means is I'm the in-house expert when it comes to anything, everything, risk, fraud, trust and safety related. So I've been at SIFT for about over 3 years now. And prior to that, worked at companies like Google, Facebook, and Square, where I helped build out their various abuse teams. And so if it's financial related, spam, scams, account takeover, malware related, even some compliance related issues, I've had to deal with it in some way, shape, or form. And so if it's been bad on the internet, I've probably had to deal with it. So I essentially share those experiences with the clients that we work with around giving them some guidance on what are some things they might be able to avoid from the personal scars that I've received along this journey. So thank you all for taking the time to join us today. A little bit of a background on SIFT. So we are essentially a fraud prevention company that helps businesses better understand who they can and cannot trust. So every day, fraudsters, criminals out there, are collaborating and conspiring against our collective whole. And the reason why SIFT was created was to level the playing field. We wanted to create the ability for companies to share information anonymously in addition to different types of technology and concepts to really fight back and kind of turn the tide to help win this kind of long-standing battle against all these different fraudsters. We do specialize in various different industries. Just machine learning, the nature of it, it can be pretty flexible, but we also do have a lot of companies in the finance sector as well. So with regards to the agenda today, pretty simple. Wanted to talk about the landscape of fraud, how to mitigate exposure in it, and then also maybe do a little bit of a demo and a bit of a wrap up there. So there's one central tenet around SIFT, and that's speed and convenience drive a company's competitive advantage. But we know that from a commerce standpoint or from a sign-up standpoint, there is a lot of friction when it comes to users signing up for different programs and platforms. And we know that especially the world is moving towards this mode where things are more of a one-click function in scenario. And there's a lot of pressure to do that across the board, whether you're a fintech company or an e-commerce company. However, we also realize that there is a struggle out there where when it comes to things like different abuse types and vectors and technology that we have to deal with, it's grown quite a lot. I've been working in this space since 2005, and really the tactics used by fraudsters have really grown tremendously in terms of trying to defraud different platforms and systems. Like, they're really quite sophisticated now, in addition to working together to exploit our systems. The other thing at play is just around the scale of things. So just recently, Twitter came out with a news of a hack, right? So lots of their different accounts were compromised, and it just ballooned quite quickly over the day, where celebrity or public figure after another started to pop up on the radar. And it was quite incredible to see that happen at such a large scale just in a day. And of course, we also need to contend with our consumers and our clients, where they have an expectation that they will be able to do anything and everything they want seamlessly, frictionlessly, anytime, anywhere around the world. And that's just a demand that they have that as a consumer, I think it's great. It pushes businesses to deliver better products in a more timely manner, but that also puts businesses in a really tough spot where they want to make those connections and make those sales and transfers really quickly, but they need to be sure that they are not exposing themselves to a great deal of loss as well. And so when it comes to online banking and doing research for this report and this talk, was of course, curious about coronavirus and COVID and how that has really changed the landscape. And from a finance perspective, it's actually been a very positive change in the sense of, hey, many businesses and banks have closed their physical doors. And so that's forced a lot of people to move online. And this entire pandemic has really caused either young people, middle-aged people, old people to really start adopting these new things. And one of them has been around mobile banking. And that's really, really great to see as a consumer. But also not all banks were quite ready for this particular flood. And so that's opened up some cracks that have also created some ways for fraudsters and criminals to expose. So what does all this lead to, right? When it comes to all these potential gaps and these exploitation areas, essentially it leads to a breakdown in trust. And that breakdown in trust doesn't happen very smoothly. So this picture is, of some erosion over time, but that breakdown in trust doesn't look like that. It looks something more like this, something more sudden and more severe and a more abrupt. That's shocking. And an old coach used to tell me that trust is earned in drops and lost in buckets, especially, I mean, that was a sports analogy, but it pertains to our business as well, especially in the finance driven sectors where if there is an account compromise or some negative abusive behavior on the platform, it's very, very difficult to win those customers back. And when you start factoring things like customer acquisition costs and customer lifetime value, it can be pretty costly when it comes to the damage that it can do. So in taking a deeper look at that breakdown of trust, here's just a laundry list of different things that can happen. So we touched on the negative PR and brand damage. There's also, if you have to deal with chargebacks or other financial burdens like that, you might have to add some additional friction to either verify users or push people through different verification methods, which can also lead to different types of churn. If you have had a negative incident, that might require you to have some legal fees, or you have to hire some more compliance folks or engineering or PMs or operations to help manage that process. All that's to say that it comes down to money, right? In some way, shape, or form, this is going to cost your business a significant amount of time, energy, and resources to really fight back. So changing gears a little bit, wanted to talk a little bit about the function or the concept of dynamic friction. We know that there is this movement towards a more seamless, integrated scenario where consumers can sign on, do trades, do transfers, and all these different things at, from their mobile phone, anytime, anywhere, which is great. 99+% of the people using our platform, using the product, are who they say they are. They're legitimate. They just want to go from point A to point B, and the easier, the better. There is, however, that sub 1% of the population that is actively trying to do bad things. And unfortunately, fraud teams and risk teams need to stop and be mindful of those particular types of users. But when it comes to technology, we don't have to be so draconian and essentially binary when it comes to yes and no. We can apply some dynamic friction when it comes to who we let on and how we let them on to do what they want to do on your app or on your website. So let's walk through an example here. So let's say you have Jeff here, one of your consumers. He logs into his account, and this is a more e-commerce focused scenario where let's say he adds a gift card or something to his cart. And in that case, it's pretty low risk, so that the numbers here coincide with the level of riskiness. So the lower the number, the less risky Jeff is. And so, yep, he has added a gift card that is some money, so his score does go up a bit, but still okay. So we might want to consider enabling a one-click checkout experience for him. So let's say later on he continues to maybe browse some items or browse inventory. His score goes down because he's essentially more trustworthy. And then let's say some time passes, and then suddenly the next time he logs in, he changes his email address or his password, or some other profile information about his account. And then he orders an iPhone, or maybe he commits, he starts to do a transfer of a larger sum of money that he hasn't done before. Now, essentially, we're at an impasse where we can straight out deny that transfer or that particular order if we want to, or we can do some other things. So whether it's additional types of verification, ask for biometrics. I was actually talking with a client earlier this week around they're sending out soft notifications via email. So it's not that the user is bad, but it's more of a sense of like, hey, we noticed a new login from this particular IP. Was this really you? And if it was really you, you can click yes, it was me. If it was not you, you can click another box for that. And that's an incredibly easy way to get feedback back from users if there is some sort of abusive or suspicious behavior going on, especially for things like account takeover. So this next slide here really is to illustrate data breaches. And so on the left-hand side, we have the year. So it goes from 2017 all the way up to 2020. And the size of the circle represents the number of credentials that were compromised for a particular business. And so Facebook here is probably the largest one, around 420 million credentials were compromised. Marriott is also a bigger one on there. But it is pretty industry agnostic. And so it's not, there's banks, there's hotels, there's retail, social media, all of them have a presence on there. And the point of this particular slide is not that these companies had a data breach. I mean, everyone is susceptible. And if they only happened in a silo, that would be one issue. That's a little bit more easy to contain. But keep in mind, and this study was done by Google at the end of 2019, about 2/3 of online users recycle passwords. So they use the same password across multiple different sites. And essentially, I mean, I get it, I understand why, but that does leave a lot of room for compromising or account takeovers to happen. And so really what we're seeing across the board is that there may be one particular company that has a data breach. Once that information is out there, it's then sold on the dark web and kind of changes hands, but then it's tested across multiple different websites. And so if you did get the password to, let's say, an Airbnb account, what are the chances that that username and password also may work for your PayPal account, your PNC account, your Wells Fargo account? And so there is a good chance that these passwords or these usernames are being reused. And that's how a lot of these fraudsters are getting into these accounts. So how often does account takeover actually happen? And SIFT did a study on this, and it turns out that 1 in every 300 successful logins is an ATO attempt, which is actually quite high. I mean, 300 logins is quite a bit, but that's a pretty decent percentage if you're considering looking at all these different verticals, all these different logins that are happening over time. And so that's a bit of a jarring fact that we live in today, where there is a very, very prominent amount of ATO or account takeover happening. And we talked a little bit about the scale of things in technology of things earlier. And this is relatively easy, right? To create different scripts, to go to different websites, enter in the username or password, see if it works. Maybe you want to try a variation of it. And it just happens over and over again across so many different websites out there. And because many businesses don't talk to each other, then it's difficult because it's almost like a divide and conquer scenario where a fraudster will essentially pick off one merchant or one company after another. So this next area wanted to go through the dark web and walk through some scenarios and some companies that we are seeing that actually have credentials for sale on these marketplaces. And just as a disclaimer, SIFT doesn't purchase these credentials or use these credentials in modeling. My team does actually do research on the dark web to really make sure to see like what is for sale, how much it's going for, to really get a pulse of what's going on. And then we consult with our clients around, hey, if they have some credentials for sale, what are some things that they can do to mitigate their exposure against this stuff? So the first thing we'll look at here, so consider the dark web marketplace essentially like a farmer's market, where every day there is new inventory. And so when I pulled this screenshot a couple days ago, these are the types of companies that had credentials that are fresh for sale, and for varying prices and things like that. And so really want to dive into a few of them with you today. So the first one I wanted to look at is Uber. And so the things to notice here are, so on the very left-hand side, you have the name of the website, uber.com. You also have the first name of the account holder, what country they're coming from. There's some credit card information. So it's very common to see the last four plus the expiration date. And this, I pulled this data on the 17th of July, so only a few days ago. And the current price of an Uber credential is going for $1.4. And actually, it's the Bitcoin equivalent of that. So if you do want to purchase something on the dark web, currently most of the transactions are being done via Bitcoin transfer. The second example is around Netflix. Of course, again, here we can see the name of the individual. What I thought was interesting for this particular pull was that you can see the type of account that the person is using, whether it's one screen at a time or two screens or four screens. It looks like these folks are located in different countries as well. And a Netflix account is currently going for $2.79. Hilton. So granted, I think a lot of people are not traveling very much at the moment. And this actually could be a very good thing from a fraudster or criminal standpoint, just because let's say we take a look at the second row, Vincent. He has 315,000 points, Hilton points, available in his account. He's a level G. I'm not sure what that means, but he's a G level member. Let's say that Vincent is not traveling very much at the moment. So he's probably not logging into his Hilton account to see what his points balance is. So what happens on a fraudster standpoint, if they have access to this account, they would go in, they'd purchase it. Actually, this is for $120. They purchase it, and then they may not redeem it for hotel stays, just because it might seem suspicious, but they can either transfer it to different accounts. They can redeem them for, let's say, Bose headphones or iPads, and just different gifts. Like gift cards is actually a very popular thing as well that is much, much harder to trace. And so they convert it to something that they can essentially resell quite easily. And because Vincent, maybe he's not looking at his statement as religiously or as often as he used to because he's not traveling as much, he may miss this. And that would be a shame. And he will eventually see that because looks like he's a quite loyal member to Hilton. Once he does report it to Hilton, typically what happens in these cases is that the company will make the user whole, just because the customer acquisition cost is quite high, the lifetime value can be quite high. I gave this example about Starbucks. So let's say someone's Starbucks account was compromised and their points were removed. It's one thing to remove those points, but if you think about maybe a cup of coffee is $5 or a few dollars, so it's not that much money. But if you think about the lifetime value of a person at Starbucks, it's probably in the thousands of dollars. I don't know, but if that instance of that account takeover causes the merchant or the consumer to churn and go to a competitor, that's a large sum of money that is going to now kind of not hit the books anymore. Here's a banking, this is a bank in the US that has some credentials for sale. The interesting thing here was it looks like they have access to the email, the first name, the last name, and also the secret question. So like things like what city was your first elementary school in? What is your dream car? And so if we worked with BB&T Bank, we would let them know like, hey, and my team does periodic scans of the dark web to look for things like this. We would say, hey, do you have a Terry in your database? Does she have this secret question? Is their email address PR star star star? And we essentially do an audit of the database to see what's going on, to identify, to see if her account is really compromised, and what other potential accounts could be compromised as well. So one thing that can happen is if there is a compromise like this, then the fraudster or the criminal doing the compromising, maybe they're coming in from one IP or one specific device, they will log into hundreds of accounts in a short period of time. And so if you can spot that by doing an audit or doing an investigation, then you can essentially shut down that attack or mitigate the exposure of that attack before it becomes an issue. And those are, I mean, from a PR standpoint, from a security standpoint, those are the things that we're really looking to take action on this, and the sooner the better. The last example I have on here is Wells Fargo. And so one thing I tell the clients that we work with, like the dark web and the fraud ecosystem is just another ecosystem. It's a supply and demand economics. Economic rules still apply. And in this case, you can have someone compromise a Wells Fargo account. Looks like the top row, the customer's name is Steve from Arizona. He has about $54,000 in his bank account. And he has several different types of bank account or different checking accounts and things like that. It's only going for $160. And so if you can compromise that account, your ROI as a fraudster is really, really good. And so these are the things that can really get a business into hot water. If they're not doing a good enough job, they can be out quite a bit of money there. So just to reiterate, it does lead to a breakdown of trust and kind of various forms on that front. So the next section is really around mitigation and what does that look like for business. And so whatever companies I've worked at in the past, or certainly the ones that I consult with today, it always takes this layered approach to win or to fight back. No one row is going to get you over the top as a business. It's really needs to kind of go through all these different layers to build a sustainable solution for these different abuses that you're facing. And so in the next few slides, I want to take a look at kind of what that actually means. So the first one is high volume digestible data ingestion. So I know that's a mouthful. This is actually a bit of a marketing term, but if you think about all the information that your customers and your users are giving you as they engage on your platform, it's actually quite a bit. So this use case, for example, looks at the customer journey. And this is typically from a marketing team, where to get to your website, they might go to Facebook or they come directly, maybe they go to Twitter, and eventually they do sign up. But very rarely is it a direct, like, I'm just going to go to your website and sign up for an account. There's some discovery that's going on, and that's the reason why marketing teams exist. They have different campaigns, and they're trying to spot intent and then market to those individuals. And so that potential customer, that prospect, they might click on an ad, and then it drives them to a promotion, which then drives them to a sign up. All those things are already happening on your platform. And so the question I'd ask yourself and your team is like, hey, what information are we already collecting from users, and how can that be applied to our particular use case? And so another personal example I wanted to share was with United Airlines. And so when people did fly, I fly United, and I have the app because I enjoy the convenience of it. These are all the different things that United requires from me to use the app. And if it was any other website or any other app, I might be a little bit more hesitant to give them access to all these things. But because I trust United, because I want the convenience, I'm willing to give up all this information to make that happen. And so that's something I'm willing to passively give or agree to give. And that can and should be used by United to prevent abuse. The other part is around machine learning. And so what we try and do is look at all these different behaviors to really understand not just the transaction, but the identity and the behavior associated with that. And this is what machines are really, really good at. it's difficult for humans and certain rules as well to spot these different patterns out there, just because there's so much variation, so much flexibility, and it's hard to see the unknown unknowns. But machine learning was built for this stuff, and so it's really able to figure out kind of if there is an attack happening or if there's an anomaly hitting the system, to spot it and to raise it as a flag, and then kind of invite that further investigation or kind of interrogation. The next one is around just rules and workflow automation. And so obviously there is a time and a place for rules, and you know, especially if you're in finance or fintech, you want to have some rules in there just to mitigate your exposure. Those are the guardrails that we have in place to make sure that nothing too suspicious or anything there is going on. And so you'll want an engine or routing system there to do those functions as well. And the next one is around analyst tools and feedback. So one of the most common things I hear when I talk to different businesses is, hey, risk team, or hey, loss prevention team, when it comes to doing investigations, how much time do you spend collecting data versus making a decision on data, or interpreting that data, and then finally making a decision? And inevitably, the vast majority of the time, over 50%, is spent on just collecting data, like from different databases, and then you spend a couple minutes kind of putting the pieces together, thinking it through, and then the decision after that is relatively quick. And so there's if you're building out a team in this loss prevention space, definitely if you're building your own tool, keep in mind it needs to or should have the ability to really do deep dives, but also understand the different signals in play, whether a particular rule triggered this particular transaction or account to pop up. Oftentimes people think that machine learning is a bit of a black box where it's just a score and that it really is not giving any rhyme or reason. We've really tried to unpack that and give people more examples on whether it's the IP or the device, or maybe it was flagged by another kind of company within our network, and that's why it's showing up for you. And so we really try and expose that and make that information more transparent, and so you can make better decisions along the way. The other one I'll touch on is around this network view. And so I mentioned that, you know, sub 1% of the population is actively trying to do bad stuff on your platform, but they cause, you know, this much damage or a disproportionate amount of damage. If you have some network visualization tools, then you can hopefully find out the small group or individuals that are doing this damage across your system, and then take mass action on them. Rather than kind of one by one going after them. Chances are, if you find one bad account, there's several more out there that are just waiting dormant, or they haven't been activated yet. I definitely saw this when I was at Facebook, where when it came to account compromise or account takeover, many businesses, there's consumers that will tell you that my account was compromised, but there are many more consumers that do not tell you that. Either one, they don't know, or two, they know, and then they just churn. Like they just go to a different competitor and they don't bother telling you. And so there is a silent majority out there that is essentially not reporting this, which is a huge blind spot for many, many businesses. And the last one I'll touch on is around reporting. And so if you are the business unit owner of the loss prevention side or the fraud team, you need to have a good pulse on your business, how it's working, what are the stats looking like? Are we within our goals for the quarter or for the month? And so being able to look at things like chargeback rates, refund rates, customer insults or false positives, being able to measure that easily and instantaneously is key, really to understand the pulse of your business and to understand where it's been and really where it's going. And of course, you want to be able to track your different agents and things like that to understand what's going on from a performance or a manual review standpoint, and go from there.
And I guess, Kevin, while you're just speaking on reporting, how do you measure false positives, and what kind of, are there generic sort of ranges that merchants should be aiming to be within in terms of false positives?
Yeah. So when it comes to the false positives, I'd say most businesses don't measure them right now, or most fraud teams don't measure them. And that is a big blind spot because you can be pretty aggressive, I'll say, when it comes to stopping bad transactions or what you think are bad transactions. And you may count those as wins, like, oh, I just stopped $1,000 transaction or a transfer of funds from going through. Great. But what if that was a legitimate user? How much is that costing the business ultimately? And that has always been difficult to measure. Some companies will measure it by people that write in or call in. Maybe they tweet at the business, and that can get a lot of attention as well. But that's always an underrepresented sample. And so what I suggest to businesses, if they have the capacity to do it, SIFT has this tool to do it as well, where you can start selectively almost A/B testing who you let in. And so let's say you suspect, you always block transactions from a particular IP address or type of device because you got burned quite badly in the past. And what can happen is that over time, fraud is changing, right? And so if a fraudster is getting declined there, then they will try a different vector or adjust their pattern of attack. If you have that rule in there and it doesn't change, you're just going to have good users get caught in that net, and you'll never know about it, potentially. And so SIFT really wanted to create the ability to start measuring and A/B testing. Okay, we will have a holdback group where a sample of these that we would have shut down, we are now going to let through. We're going to tag it, let it go through, and see what happens next. And that's something that we work with businesses on to develop that budget and that cadence for.